show you what's happening here, how we're incorporating related markets into our analysis to help us make much better trading decisions. Now, you see I have NVIDIA. A lot of you guys are on computers. Most of them have an NVIDIA video card in them right now is probably the most likely scenario. So a very popular company, very widely traded company. But what's nice here is you can actually go into the software here, and this is our VantagePoint Intermarket Analysis software. So what this does is really analyzes multiple market relationships and then creates a forecast for us to help us understand what should we expect over the next couple trading days, how should we go ahead and trade that market according to our strategy here. So if I come over here to, we can type in the symbol, you see we have NVIDIA here. I'm going to right click and click on properties, and this allows us to actually view what is referred to as the intermarkets. Now this is key, guys. Now for every single market that VantagePoint forecasts for, we're looking at the 25 to 30 most closely related markets that are known to affect and drive and influence the price of NVIDIA. Now, how do we do this? Now, how we're doing this is it's the type of artificial intelligence, referred to as neural networks. Neural networks widely used in business applications, weather forecasting. But this company that develops this software has been around for 37 years, fine-tuned this approach, this specific approach to forecasting markets for the past 25 years. But VantagePoint holds 2 patents on this approach of intermarket analysis. One is scanning through the unbelievable amounts of data that comes through every evening. So when the futures markets close, the Asian markets, really after the U.S. markets here close at around 6 p.m. in the evening, it's analyzing all that market data from all the global markets. It's looking at the dollar index, global currencies. You can see here technology spider, the Qs, crude oil, and then generating a forecast for the next couple of trading days for you. And I'm going to show you exactly how you interpret these forecasts. But there's actually 2 patents on this approach. So this technology you're just not going to find anywhere else. But the reality is that most traders just simply, don't have the means, and certainly in this age, with all the data that needs to be analyzed, you simply couldn't do this type of analysis. I mean, imagine having to sit down and look at 20 and 30 markets, weigh all those relationships. It's just simply impossible, and so you have to utilize technology to do this type of analysis. The unfortunate and sad part for a lot of traders is a lot of traders are relying on, traditional technical indicators, which are brutally simplistic models really just based on averages, standard deviations, very, very simplistic stuff that really doesn't have the means to adapt and consistently forecast, markets, whether it's to the upside, downside, commodity markets, currency markets. So, this is the secret sauce, guys. This is the technology that's really performing this analysis every single day for us, but then weighing all these relationships and plotting forward so that we can make better trading decisions. Now, you see in this market tree here, you can just see how many markets that we do forecast for. There's 12 different stock sectors, hundreds of stocks, but also over 30 currency pairs, the major pairs and the cross pairs. So vitally important for currency traders. You can't trade the cross pairs of the British pound, US dollar, things like this, without analyzing, how is the dollar trading, how is the euro moving against the British pound, how is the yen moving, how are the equity markets moving in inverse correlations usually with these markets. So regardless of the markets you're trading, we've been able to apply this approach and consistently generate forecasts that are up to 86% accurate. So let me go ahead and we're going to go through these concepts of using these confirming markets, helping us get really better tools to help us make much better trading decisions. So I have this chart here for NVIDIA. I see I have a couple questions coming in, so let me go ahead. I want to explain everything that we see here on this chart. Now, starting at the top against the price data here, you're going to see that we have a blue line and a black line, and this is very, very important now. The black line on your screen there, that is a regular simple moving average. It's a lagging indicator. It's what a lot of traders are using in the market. They just take a simple moving average and another simple moving average. They create some crossover conditions, but both of those indicators are always lagging behind the market and always just reacting to where market prices have already been. Now, the blue line that you see on the screen, that is VantagePoint's proprietary predicted moving average. That value is plotted. So you really shouldn't think of it as just a crossover, but think of it as an actual value that's plotted on this chart by weighing all of those different market relationships. So remember, it's not just knowing that a relationship is important, knowing that it shares some sort of correlation, but is it a positive correlation? Is it a negative correlation? Is there a lead in the market? Is there a lag in the market? A lot of these markets, you'll see a market move, but you really have to be able to measure, what is the lead time there so that I can have better timing in the market, because you can't just say, hey, I'm going to go look and, trade the S&P 500 and then go in and trade the DAX. Those leads and lags, those relationships, they change over time, and that's what the technology is really ideal at doing, is analyzing those relationships. Really, the type of artificial intelligence, the learning machine, so it learns these relationships over time and consistently forecasts forward. So when we plot that line, it's weighing all of those relationships and helping us with direction. We talked about those two things, timing and direction. How are we going to narrow down on these areas and help us be a better trader? Now, what we want to look for, using this approach is, anytime we have our predicted moving average move before our regular moving average, so essentially our leading indicator of this technology, leading or lagging indicator, we want to go ahead and take note of that, because that represents a trend change in the market. And the whole thing is we want to have good timing to get in on these trend changes early. So whenever we see a crossover, blue line over black line, that's signifying, hey, there's an opportunity there, and we want to go ahead and take advantage of it. Now, if we look at this chart, it's very straightforward as what you're going to be looking for essentially, each evening doing this analysis are these sorts of crossovers, and there's a lot of means, and I'll go through this, of how you can scan through all this information. So I mean, having, just the important information for the trading day presented to you. But as long as that blue line remains above the black line, it's still forecasting the direction of the market, and so you should go ahead and trade in line with that forecast. So you see, as long as that blue line remains above the black line, you want to stay long the market. So in this scenario, just off of that tool, and I see some questions about this tool at the bottom, and I'm going to go over that with you in detail because it's very important that we use these things together. But just in this example, once that blue line moved above the black line, the market moved up 29, almost 30%. 22 trading days. So, you really got to think, I mean, when was the last time you bought a 30-something, $36 stock and got $10 off of it in just a few weeks? Now, this is very, very important because, this isn't, hypothetical. The market just isn't moving up anymore. We actually have gotten a crossover to the downside. So this recently was an opportunity you just took profit on, and about $10. So, if you can buy even, a few hundred shares, you've already made a few $1,000s in a very short period of time. And so that's what's going to help you really hone in on the direction of your trades, to really understand, not only when you should be getting into a market, but allowing you to hold on to your trade during times of volatility. And that's critically, critically important to actually capture these types of really nice moves in the market. So what you also want to pay attention to is, the separation between the blue and the black line. So you'll notice that as these lines became very separated, that's telling you that there's a lot of strength in this trend. Because, think about it, if the predicted moving average is a great distance different than the lagging, a simple moving average, it's telling you that that prediction is very, very strong, and that average should move up with a lot of force very quickly, really. And so we get a lot of separation here, but you'll notice that when these lines start to pinch together, things, really simmer down. You see that, once this market starts, once the forecast essentially starts to go flat, the market's, for the most part, going sideways here until we get that crossover to the downside there. So let me go ahead, and I want to explain this bottom indicator here, because when you fully understand these two things, and then we'll go through some more markets and demonstrate this, you're really going to understand, okay, I can see how I can use this on a daily basis to make better trading decisions. Now, I'll actually go ahead and I'll start using a pen here, because I've been told it's hard to see some of these things. So now, what we want to do here is whenever we see these crossovers, and now I'm going to have to make this a little bit smaller, but whenever we see these crossovers from the software, as a trend trader, essentially, what we want to do is get confirmation from this bottom indicator, the neural index. But let me go ahead and explain this neural index, because it's very important. Now, what you're going to notice is this indicator can only be a 1 or a 0. There's not a lot of room for interpretation here, guys. 1 or 0. Now, what is this indicator telling us? Now, this indicator is essentially a short-term forecast. It's looking 2 trading days ahead. 2 candlesticks is how you can think of it. Now, we can identify direction with our predicted moving average, But what's going to help us with our timing, if we're a shorter term trader, maybe we day trade, what's going to help us with that short term timing in the market is this neural index. Now, how the indicator works and the reason it's so accurate is, again, it's analyzing all of those market relationships and then consistently trying to forecast, again, 2 trading days ahead, that short-term strength or weakness. If you simply build this indicator into your trading, and how I like to use it essentially as a throttle, knowing when you want to be heavier on a position, knowing that, hey, I've got my direction down, my short-term forecast is in agreement with that, that can really simplify the process and help you hone in on and identify, here's where I should be paying attention, here's where everything's clearly forecasting, higher, lower, whichever way you want to trade. But if we take a close look at this, remember, short-term forecasting of average prices, we get a cross over the upside, neural index up at a 1. You'll notice our blue line remains above our black line here, saying the overall trend direction is up, and we get this nice rally higher. But what I want to point out is when you get all of these tools combined at the same time, you see you get these really nice moves in the market. So neural index up at a 1, trend up, you're moving higher. So, 3 trading days, about a 7% move just over a few days. Obviously, the software is still saying, look, short-term forecasting, up, up, up. You can day trade the market every single day, however you want to approach things. But you see, it isn't until right here where the neural index gets negative. So, as a trader who's gotten into this trend, caught this move higher, there's a lot of options. You can go ahead, trail your stops, ride this trend as long as possible. But as soon as that blue line comes below the black line, you know the direction has changed, and you know your behavior should change in the market as well. And, today is a very interesting day for you guys to be in the webinar, because if, I'll show you this scanning feature and how we can really scan hundreds of markets with this approach, this, essentially these leading indicators. And, today it was very, very clear you wanted to go ahead and be short, be taking profit on any of those long positions, but a lot of very interesting things going on in the market. But I certainly want to have these tools that point out things like this, that even when the market may look like it's still going up, look, direction is down, neural index is very weak, saying go ahead, take your profits, maybe go ahead and short, look for something else. But the only reason you're really have that forecast and it's that clear is consistently accurate forecasts utilizing this approach of looking at these neural networks. Now, does everyone understand that approach? I mean, at least understand how, the tools and how I explain them. Does this look like something that you could do on a nightly basis, essentially looking for these crossovers, seeing that confirmation? Go ahead and type yes or no into the question box. Is this something that makes sense? Do you understand it? Okay, well, I understand the concepts there. The indicators seem quite simple. This is definitely something that I could see improving my trading and something I could do on a nightly basis. So yes, excellent. Look, I utilize this approach every single night. I'll show you, I scan through all of these markets. And it really presents you with these opportunities right when they're beginning. So I'll show you, how you can do that and really cut down a lot of the time for your analysis and things like that. Now, I want to go ahead and walk you through this, though, so you can understand how moving forward with the software, regardless of where you are at in the trade, you're simply using this as a forecast. It's going to be consistently accurate forecasting. Hey, what should I expect as a trader over the next couple of days? I have a trader mentioned, are there any stop losses? That's the whole point, is when you understand the overall direction and you have these short-term tools, you're not going to have to run huge stop losses. Now, there isn't a tool that tells you exactly where to put your stop loss, but because you have the forecast, over the next couple of days, where should my expectations for this market be? And when you can set that expectation, you can go ahead and execute your strategy efficiently. And that's very, very key, being efficient, knowing here's my approach, here's my plan, go ahead and execute that strategy. But, it doesn't matter what you're doing here. You could be a day trader, you could be a swing trader, and therefore, your stop losses and things like that will change. But what's the most important is direction and timing. If you're trading options, day trading, short-term trading, swing or position trading, timing and direction are going to make all the difference for, remember, what affects your overall trading days is the combination of all your trading decisions over a very long period of time, and just never lose sight of that. And that's where the software really helps you out, is guiding every single trading decision you're going to have to make with an accurate forecast. Now, I want to show you how this works, moving forward, and how, looking forward, you're going to be able to say, okay, well, I can see how this is showing me how things change and how should I adapt my trading. I see I have a couple questions here. I'll go ahead and touch on this. On the index, what does 1 mean? What does 0 mean? Again, guys, Neural Index 2-day forecast. Remember, we're wanted to home in on timing and direction. Our predicted moving average, our blue line, that points out our direction. Do we want to be long? Do we want to be short in the market? The Neural Index is a short-term tool, only looking ahead 2 trading days. So not giving our overall direction, but letting us know, remember, I like to say as a throttle. Do we want to be heavier on our position? Should we have that expectation that we should be hitting those, hitting our profit targets, things moving higher in the market? That's what we want to go ahead and use that Neural Index for as a throttle, knowing when we want to push these trades. So now I've gone ahead and I've zoomed in on this area, but we're going to be able to plot forward, and you're going to be able to see how this works going through a long period of time. You see this is going all the way back to January. But we have here H&R block, and here's what I want to show you here. Now, I want you guys to follow along. Type into the question box what you guys are seeing here. So if the blue line's crossed above the black line and the Neural Index is up at a 1, what do we want to do? Type in the box long, short, what do we want to be doing? And we're going to start moving this forward and show you how, regardless of how the market changes, the conditions as a market, are going to change, from one day to the next, how you're going to be able to use the software as, again, an accurate forecast for every single day in your trading moving forward, so you know what to expect. So we're going to go ahead and plot this forward, and as I go through, let me know if anything changes for you, if you think that any decisions should change. So cross over the upside, Neural Index, you'll see at the bottom here, green line is still up at a 1, direction, timing. Market moves up. We move from about 32 up to about 33. Now this is going to expand out quite a lot, guys, because we've got a long, long span of time. Market conditions go up, go down, but we want to go ahead and see how are these tools going to help us make trading decisions every single day for whatever our time frame is. These are daily bars and candles, but it simply doesn't matter, what your trading style is. I'll show you some tools that will help you intraday and things like that. So cross over the upside. Neural Index up at a 1. The forecast is saying up. The market is moving higher, and again, you're going to notice a lot of separation between these lines. So not a whole lot has really happened in this market here, but you see that blue and the black line really creating quite that spread there, along with that short-term forecast being up as well. So let's go ahead and roll this forward. Neural Index still up. This is very important, guys, and in times like this, I know a lot of traders who are going to have problems with this, and the reason is because, a lot of times you'll get a really nice rally higher in the market, but you don't want to give back those, unrealized gains. And so what a lot of traders end up doing is they see the market trading lower, and they just can't take it anymore. They want to lock in that tiny little profit that they've made. They end up getting out of the market or tightening stops up way too tight instead of just holding out their position. Well, when you have tools that are going to be consistently accurate every single day, this is very, very clear, saying, look, blue line way above the black line. Average price is way over that lagging indicator, and the Neural Index is strongly at a 1. So every day it's coming through and saying, look, Neural Index is still up at a 1, still forecasting average prices to move higher. So we roll this forward, and this is key here. Now, we see the Neural Index moves down to a 0. So what is that telling us? It's saying, look, short-term weakness in the market. So this really helps you as a trader understand, hey, can I get a cheaper price on this long-term trade I'm taking? What should your expectations be? Certainly on, these trading days here in the market, you want to be pushing those long positions, right? And you see the Neural Index every single day saying push the longs, push the longs, push the longs. But when you get some conflict, you can go ahead and again, lower that throttle a little bit, like turn things down and try to trade just in line with what the software is forecasting for you. So we see Neural Index is down at a 0 for 3 days here. Remember, that's your short-term forecasting, saying weak, weak, weak. But look at this, blue line still above the black line, and certainly you had some weakness here in the market. The market goes all the way back down to 32, but we don't have a crossover here, guys. The market is still, you see the blue line, not even close. It's not even like these lines are on top of each other and touching. There's still quite a lot of separation. You see your Neural Index comes back up to a 1 saying, look, go ahead, look to get long the market again. So, this is really key to help you understand, look, what should my trading decisions be in the market based off my trading style? If you're a short-term trader, this is where you're getting aggressive. This is where you're making a lot of your money, getting that fresh trend in the market. Even here, coming in and looking to buy the market, but look how quickly things adapt and change. And the software says, look, now our crossover is to the downside. So conditions have changed, and you've even had the Neural Index down for 2 days, saying now Well, what do we want to do? We want to look to go short. We want to buy some put options. Doesn't really matter what our approach is, but we know that, really our approach to the market should change. We've kind of flipped our directional bias. So this is what's going to help us understand, hey, what direction should I be trading? Market X, Y, Z, doesn't matter what you're trading. So now what should we be doing in the market, guys? Let me know. Should we be going long? Should we be going short? Should we be buying puts? Should we be calling calls? But just understand that, using the software every single day, that's what's going to be guiding your decisions. And that's going to be based off a global approach, analyzing these intermarket relationships rather than, essentially lagging indicators. So now we have our blue line cross below our black line, neural index down at a 0. And let me go ahead and roll this forward. So this is important because you see a lot of people were probably even had gotten into the market back here. They're going to have a lot of difficulty over this period of time right here. If you have tools that say, hey, I still got a little profit, I still want to go ahead and hold on to the market, you can see how catastrophic that decision was. And so if you have the tools that are really pointing these things out consistently, really fine-tuned to try to plot those prices forward every couple of days and are consistently accurate at doing that, well, that's going to help you make better trading decisions, and it's going to help you avoid things like this, which will be catastrophic to your trading if you're on the wrong side of them. You see, in about 3 trading days, the market moves down 16%. So anyone who had bought this stock in the 30s just got annihilated, just got absolutely killed regardless of what their approach was if they didn't have the tools that clearly said, look, direction down, short term over the next 48 hours, you want to go ahead and be short this market. And I think I've done a good job here of explaining these tools of direction and timing. Direction and timing. Direction down, use that neural index as a throttle, and it'll help you capture opportunities in the market like this move in H&R Block. But what I'm trying to get to now is to show you just how nice this works. So for the past several months, it's been very clear that you should be short H&R Block, and the market has absolutely moved lower, about 41%. So imagine you trade put options, just go ahead and short the shares. I often just go ahead and short the shares because, I know what I'm doing. I'm using the software and I understand, what kind of risks I'm taking on. But a lot of traders, they just don't have the confidence to go ahead and short. And it really takes away a lot of the opportunities in the market. It really, removes a lot of the diversification as far as their approach that they could be taking to their trading. And so what we want to do here is obviously just make sure that we're using a tool adapting to how that software is what it's forecasting. So as long as we understand how these tools work, what they're forecasting, how far ahead they're predicting, that can help us make better trading decisions, even in the context of, remember these accuracy statistics, this is through earnings report, this is through Fed announcements, this is through all this sorts of different fundamental data that gets traders often tripped up in the markets and not focusing on, hey, what is the direction of the trend? How can I improve my timing to make better trading decisions, again, every single day? Because all that's going to matter is, the decisions after your trading career. It's not just going to be one trade that does it for you. But just to roll this forward, here's earnings, guys, and it doesn't matter. I don't pay much attention to when earnings and things like this are coming out because I know my approach has that really expectancy. But you see blue line crosses over black line, neural index moves up. We get a nice rally in the market, but it's saying, look, go ahead and stay long the market for H&R Block. And there's not a lot of stocks doing much today. So you want to go ahead and use this approach to get into markets, trail your stops, but on a day like today, it's not the right time to be taking fresh longs on the market. If you have positions and you're trailing stops, great. Hold those stocks, go through the Fed announcement, it won't be a problem. But the problem comes in when you're trying to make these decisions off the fly, when you don't have an approach that's consistent, accurate over a long span of time. So, again, guys, if this looks like something you can handle, go ahead and let me know, and we'll go ahead and move on here. Now, one thing that's really helpful, if you understand that approach of looking at, confirming markets, right? Or not confirming markets, but at least this approach of using the technology to do intermarket analysis, the real benefit of that is that when we're looking to trade a stock, VantagePoint is already looking at things like the ETF. It's looking at tons of things. It's looking at a lot of ETF groups, similar stocks, competing stocks. A lot of these relationships, really the technology has identified. It's looked through huge amounts of data. So what can help us, though, even have a lot more confidence with those trading decisions is look at confirming markets like the ETF groups when we want to go ahead and trade some individual shares within that market. So if we look here at Cypress Semiconductor, I'm actually going to bring up the Market Vector Semiconductor ETF here. And so, for me, when I look at an individual stock to trade, I really want to say, hey, what sector does this market trade in? What is the ETF group doing? What is the whole sector doing? And because we have these scanning features, all these things really come through at the same time. So it really grabs your attention and says, look, here's where you want to focus. Here's where you want to pay some attention. Go ahead and get ready. Get your strategy ready to execute. So here, and again, I want to really harp on this because the scanning feature is really the thing here that's going to help you cut down on a lot of this time, but then also identify a lot of these things. So these things will be presented to you rather than trying to read earnings reports and all these other things, trying to figure out where you want to trade. This can help you identify the opportunities that are going to have that high probability of getting the type of move that you want. But then you're also, once you get into them, you're going to have that consistent forecasting to adapt as the market moves forward. So that's really the key here. But we see here in the Cypress Semiconductors, we have a crossover, but I want to actually focus a little bit more on the ETF because whenever you see these crossovers here in the software from the ETF group, we see this neural index very strong, you're going to, again, see a lot of individual companies, individual stocks that have that exact same crossover, that neural index, the exact same forecast, essentially. And so that's what's going to give you a lot more confidence to say, hey, let me go ahead and look at some semiconductor markets here, some individual shares, and look to trade those. And you see, again, how this works. Direction and timing. This is when the market is showing us that there's an opportunity. Over the next couple days, we should at least get that push higher if the neural index is up at a 1. So that says, look, let's go ahead, try to get involved with this market. Now, as long as the blue line stays above the black line, we're going to hold that position. But look at what's going on here. You see over the past few days, our neural index has gotten very, very weak here. You see we've actually gotten a crossover from, actually in the market for Cypress Semiconductors. And look how weak the neural index has been over the past 5 trading days. So if you're in there as a day trader, you've been trading this market up, or the semiconductors. We saw it in Taiwan Semiconductor. We saw it in a lot of these shares. But this is where you're coming in and buying up stock. So, I mean, how many shares of a $9 stock could you afford to purchase? I mean, let me know. But seriously here, $1.70 per share over 13 trading days, that can have a significant impact on your trading. So let me know, guys, of a $9 stock, maybe you can use the last example of a stock you traded, change the value so it equals out, but how many shares could you have purchased? Because simply $9,000 investment here, up over a $10,000. So a really, really nice move there. Or over $1,000 rather. So last thing I want to show you, and then I'm going to show you the scanning feature here, but I really want to harp on this because a lot of traders get so wrapped up in earnings reports and this and that and a lot of these other things going on, and they don't think about what is my approach? What is my approach when I need to go in and make this trading decision, when I need to execute my strategy? So regardless of the markets that you're trading, it's going to make sure that you're consistently positioning yourself on the right side of the market. I know a lot of people are really excited about LinkedIn Corporation here, so let me go ahead and show you the chart. But crossover the upside, neural index up at a 1, but this was forecasted all the way back at 110, 115 a share, saying, look, you want to go ahead and look to get long the market for LinkedIn shares. And we'll see that this is an absolutely excellent move, but you wanted to be able to identify that, look, hold on to that position, hold out, and you can go ahead and capture those nice moves in the market. A while back, a couple months, I was in St. Jude, sort of the same things. The indicators get you into the market at the right time, but if you're trailing those stops, some really great surprising things can happen, but you always want to make sure that, again, you never know when these things are going to happen, but you want to make sure that you're trading in a way that allows you to capture them, and that's what's going to make all the difference there as far as your trading and really catching these surprise markets where Microsoft comes in, buys the shares, certainly didn't want to be short over that time period, and VantagePoint really forecasting, look, the market is still forecasted to move higher. Now, I did mention the scanning feature, and this is so key because this is a really important day, in my view, in the markets, but this is what's really interesting about this is, you don't need to be spending hours and hours every evening doing your analysis. So it's a heck of a lot easier to go ahead and have an approach, have a process in place, but that's actually linked to, highly accurate and consistent forecasts. So what we can do is actually, I'm going to open up the services sector. You see, I split everything up by sector. I've got futures. I got a lot of different portfolios, and you can customize these things however you want. But what I really want to demonstrate, especially today, and this is really interesting, is that let me go ahead and open this up. But like I mentioned, all of this stuff is really about your direction and your timing in the markets. So you're going to want to, especially in days like this, there's a lot of opportunities where the markets are still trending higher. You can go ahead, trail stops, write out some really nice trends, trading in line with the software. But, on days like today, you certainly don't want to get caught making the wrong decisions or just, let me just go ahead. I'll scan through this offer, but all I'm really just trying to mention is, I ran my scans last evening. I do this every single night, and it was blatantly obvious that you wanted to go ahead and be short today, and if the markets are moving lower. So I'm going to run through the scan. Usually we look for opportunities to the upside, but that's the whole point, and why this is so effective is because there were none today. So medium-term crossover, I'm actually going to move this to down. We can go ahead and change this to 1. And so this is what you can do. You can go ahead and set up these portfolios. Maybe you trade the options. You want highly liquid markets in there. You can go ahead and insert whatever markets you want. You see I have all these service sector stocks. I mean, literally over hundreds. But you can scan through these conditions. So we can look for, hey, we want these crossover to the downside. We want a new opportunity here. We want that neural index to be matching, right? Those are the 3 conditions that we really looked for. So we see out of 169 markets, we've already narrowed this down to 28 markets to go ahead and look for opportunities to trade today. Now, I would set this to up, but that's the problem. None of them came through on the long side. I mean, all over the market, there are very, very few opportunities. You either need to be trailing stops on LinkedIn, trailing stocks on some other tech stocks, but there wasn't a lot for you to get long today. The timing's not right. But you can see that, by utilizing this feature, we can identify new opportunities, new opportunities to say, hey, look, if we want to trade the options, if we want to go ahead and short the shares, where should we be focused as a trader in line today with, where the probabilities are, where we're going to get that accurate forecasting. So this is what's going to cut down a ton of time, guys. I trade all markets, futures, Forex, stocks. And what I like to do is I sit down in the evening at about 6 p.m. when all the data comes through for the VantagePoint software to perform this type of analysis. And I just go through the futures and the Forex markets because, in reality, I want to spend some time with my girlfriend in the evening so I can see, what's going on in the S&P. I can see what's going on in the commodities, the Forex market. I need to get that done in the evening. But then you can wake up in the morning, scan through these sectors, scan through the markets that you're trading for stocks, and identify where you want to be in the market that day, where you want to be taking these fresh positions in the market. And what's great about this is that when you have a tool like this, that every single day presenting with new opportunities to the long side, to the short side, over time you'll just develop a portfolio. You're going to be in markets that are trending to the upside. You can, again, trail those stops, ride those market trends, but at times there's going to be new opportunities to the downside so that you can really set up a portfolio where you've got some longs, got some shorts, and they're all really geared to push in your direction and make you money. So regardless of what happens with Janet Yellen, what happens with the S&P, all this other stuff, you're trading in a way and with a process that's really going to put the odds in your favor and have you really consistent with your approach. So, if you can't measure something, you definitely can't improve it. So this will make sure that you're doing things in a consistent way moving forward through time. So again, saves you a ton of time, really about 10 minutes in the evening. Can scan through literally hundreds of markets. You see about 169 markets we scan through here in a very short period of time, able to identify, hey, where do we want to be paying attention in the market?